Hi, this is Zak Mir with the Bulletin Board Heroes, best of 2023 year to date. And we're starting off with the B90, which I don't think has got much engagement with the market, but we have seen the shares more than double over the course of 2023, helped along by the fact that shares hit a low just after the year began. Current setup here is that we hit the top of a broadening triangle twice, once around 7p and then once around 7.5 pence, and above 7.5 pence we're looking for the shares to have one final leg, or one new leg up towards that April 2022 resistance line projection around 10.25 pence. Otherwise, hopefully we at least find support around the 7.5 to 8 pence zone. Moving along to Chill Brands, which has been the recovery that's kept on giving. Here you can see that we started the rally here basically with the break, basically in January with the break of the 50-day moving average, then a break of the resistance line there as well from October, and then breaking the 200-day line in February around 2.5 pence. And since then, it's basically been up and away. And in fact, there's actually been an acceleration, unfilled gap to the upside in the middle of the month, and above 12.25 pence, the initial May peak, we're looking at least as high as 20 pence as soon as the end of next month. At this stage, only lots of days below the 10 pence level, really delaying the prospect of 20 pence over the next month or so. Great news and great chart on Celadon with its £3 million order here, although the bears may be scratching their heads because obviously medical cannabis companies have had a tough time in recent years with the rather draconian rules and regs that they've been faced with. But here, Celadon got a deal over the line, and that's meant that the shares have consolidated the big spike that we had back in March. Above the rising 50-day moving average, currently around £1.40, and above 140 we're looking for as high as £2.20 over the next 1 to 2 months, hopefully by the end of July, some kind of time frame like that. But decent situation there on both a fundamental and technical basis. A stock which or a company which I interviewed not so long ago was Equipmake, and I have to say I was inspired by how well the company's doing, especially as it's on Aquis, which means that it deserves extra applause. Here we've got a rising trend channel which has been in place since the shares came to market in July 2022. The floor of the channel there around the 50-day moving average at 8.3 pence, and the top of the channel heading for as high as 15 pence over the next 1 to 2 months. But you can see they're pretty solid uptrend in the daily chart, on the daily chart, and both the 50 and 200-day moving averages rising. So above that 8 pence area, looking for the shares to nearly double over the course of the summer. The stock which was certainly on the back foot as far as sentiment was concerned was Hummingbird Resources, but here we had the big break as was expected of the 7.5 pence level and the 200-day moving average. That happened during March, and the shares have been basically up and away ever since. Good that we had a test for support at old resistance, initial 2022 resistance around 15 pence, and we bounced after that. So the current view on the trajectory is that even though the shares may wait a while for the 50 and 200-day moving averages to catch up, the eventual target here could be 24 pence over the course of the summer, maybe by the end of July, above 15 pence, looking for 24 or even 25 pence on Hummingbird. And we've just had the trend affirmed by a bounce off the uptrend in the RSI window as well, near the 50 level, so that also helps. Stock which I haven't looked at very much, but Iofina has been one of the winners of the year. Again, a stock which had a dip just around the turn of the year and has basically made good on the move ever since. Golden cross back at the beginning of February as well. That was a golden cross between the 50 and 200-day lines. And the view now is that we should be heading at least up towards the 43 pence level over the next 1 to 2 months, if not much more. And in fact, if you are a fan of the shares and looking for greater glories, then I will draw the line, which is where the shares could be heading. That could be up towards that resistance line projection there from November, as high as 50 pence over the next 2 to 3 months max. And the upside value there, while we hold above the old February resistance around 32. So above 32, looking for 50 as a best case scenario. On to Kodal, which a company which I interviewed quite a few times. I haven't actually spoken to the company for a while now, but still the shares, even though they peaked at 0.9 pence, still bouncing off a rising 50-day moving average. So we're hoping that this is the dip, which will then see the uptrend revert. Above 0.64 on the 50-day line, looking for a retest of 0.9 over the next couple of months, and maybe up to 1.2 pence in that resistance line there from October over the course of the summer. At this stage, only back below 0.6, really questioning the ongoing recovery there at Kodal. One of the best stocks of the year, and making it on Aquis as well, is or has been Marula. And here we also looks as though we've got a resumption of the uptrend that we had since the turn of the year. So the support line there from back in December around 8.25 pence. Above that, we're looking for a break of the March resistance line around 11 pence, and then that should take us up to size 18 pence. Over the next 2 to 3 months, but above 8 pence looking quite chipper there for Marula. Another stock which has made the grade in terms of recovery at least is NFT, obviously not at the dizzy heights it was last year and the year before, but we've got a rising trend channel there from the middle of 2022 and above the 50-day moving average. Around 1.5 pence, we're looking for 3.5 pence over the next 2 to 3 months on a technical basis, only on a technical basis. We had an uphill gap to the upside in March, and that is held, and we're now holding near former resistance, so it does look relatively strong on a technical view, putting the fundamentals to one side. A stock which has blown the lights out in terms of both the fundamentals and the technicals is Ondo. A lot of smart money in this situation. We're just waiting for the shares, hopefully, to break that line of resistance from July 2021, around 20 pence. Above 20, we're looking for as high as 27 or 28 pence over the following 1 to 2 months, and not expecting any price action here now, back below 15. So above 15, looking for 27 or 28. On Ondo, just a few stocks to go now. First one is Reliance, which I haven't covered as much as or rather Resolute, which I haven't covered as much as I would have liked to. Here we've got a wide broadening triangle there from the summer of 2021 above the 50-day moving average at 23 pence, looking for 34 pence over the course of this summer, so maybe by the end of July, in a situation which is looking pretty strong in terms of the technicals, given the consolidation at and above former resistance that we've had, the old resistance from early last year, around 22, 23 pence. Interesting that once some of the stocks which have been beaten up start rising, the bears go quiet. I'm not quite sure whether it's because they've covered their positions or they've just given up the ghost. But here we have Verditek with the bear trap gap reversal that we had in March, April. Shares now well above the 50-day and 200-day moving averages, around 1.25 pence. And while that's the case, we're looking for 2.5 or 2.6 pence, perhaps as soon as the end of next month. But a decent turnaround there. And as I said, the bears seem to have gone remarkably quiet. A couple of stocks which haven't had any bear attacks are Zinnwald first. And here you can see that we've hit our first target around 14 pence, bit of an overshoot there up to 15.5. But above the 13 to 14 pence area, which was May resistance, looking for as high as 22 pence, maybe by the end of July. Let's see if that unfilled gap to the upside is something that the shares can follow through. Normally that is the case. Just about holding on to that uptrend line in the RSI window as well. Finishing off with Zanaga, and here another stock which surprising that there's not much engagement with the Twitterati and the social media, but at least here we see that the shares have maintained that big break higher that we've had since November. Ideally, there's no break back below the 50-day moving average around 7.3 pence, ahead of a move up to the top of the rising trend channel from September as high as 13 pence over the next 1 to 2 months. If you're cautious, obviously wait for a break of the 10 pence area before assuming a push to the upside. That's it for me today. More normal updates during the week.